Good morning, good morning, good morning. Monday morning. An agent called me last week and said, Joe, went to a client's house and they would show me their policy, yet I had no idea what I was looking at. So for everybody on this call, whether you're a seasoned veteran, you're brand new starting out, or you've never looked at a policy, my recommendation is for you, when you go to someone's house, you're going to tell them you're there to give them information. I'm also here to review your policy to see if you really need anything additional. And then from there we can discuss a program and plan that fits your needs. Some agents say, Joe, I feel kind of funny asking them for that policy. Well, you need to start asking for the policy to where you can see what they have. And a lot of times when an agent comes to a house, they'll tell the client you're going to get a $15,000 policy, and just for a number, your premiums are going to be $100 a month. The client says, Joe, that's fantastic. I want that there. I want that plan. So the client goes, fills out all the information. They go online, they do it. As the agent is there, back in the day, we had to submit the applications. Then we get the approval back in the mail, or they'll call us and say, Joe, you applied for immediate, yet we're giving you a graded. So sometimes what agents have done in the past, and they're probably still doing it today, is that they'll tell the client the $15,000 for $100 a month, yet the client does not get immediate, they'll get a graded. A graded, depending on the company, have different meanings. For example, with Prosperity, Royal Neighbors, American Amicable, their graded is 30% year one of the face amount. Year two, it's 70% of the face amount. And then year three, they get the full 100%. They pass away accidentally, 100% day one. So the agent will say, issue it graded. They'll mail it to the client. The client, most of the time, does not even open it up. They put it where it's supposed to go. Do open it up, all they're going to see is $100 a month. They're not going to realize that their $15,000 policy has decreased to, let's say, $12,200. So now you go to the house. May I see your policy? And let's sit and say you're an inexperienced agent, just started in business or been doing it for a while and just never took the step to ask for it. You can ask for the policy. They may give you a little hee and hawing. Yet say, you know something, it's just best if I see what you have so we can decide on what you need, because I know you don't want to spend more money if you don't need to. Sometimes that triggers people to say, he's not trying to sell me something, he wants to see what I have, and hopefully I don't have to spend any money. You get the policy. I'm going to tell you 50% of the time when you get the policy from the client, it's not even in a package. It's not even opened up. So you open it up, or it's open and you look at it, and you're saying to yourself, I have no idea what I'm looking at. No idea. So the first thing I do is I get the policy. I look at the first page. It normally says the client's name, the date of issue, their policy number, the face amount. Then I'll go to the back of the policy where it has their application. It's got the application. It has their beneficiary. Very important to mention to them. See, I see over here how you have your son Anthony and your daughter Marie as your beneficiaries. I see them as 50-50. Then I go to the next page and I look at the health questions to see how the questions are answered. If they're answered all no, I'm going to assume it's immediate issue. No waiting period. Now I go back to the front, and usually on page 2 or page 3, it's going to show you the table of contents of what the client has. Year one is going to show you premiums, $1,200, $15,000, you know they got immediate benefits. Now if you see on there year one is $1,200 in premiums, yet the face amount is only $12,200, you're going to look back to the front page to say, Did I see 12,002 or did I see 15? So when you see the 15 on the front page, that is not there, and the client told you 15, they got a graded policy. How does that happen? So now you've got to ask yourself, how do I tell the client what they have? Because the client feels they got 15,000. So the way I like doing it, instead of telling them what they have, if I'm sitting across from them, I say, may I sit next to you to show you your policy, to go over it with you, to where you know exactly what you have. So I sit next to them. Normally I have them on it doesn't really matter what side you have them on. I'm there, I'm talking to them. I said, now you told me earlier you had a policy for 15,000, you're paying $100 a month. They're good, yes I do. First thing you're going to show them is $100 a month. Okay? Provided it's $100 and maybe 1 cent, because they can't normally get it exactly right. Now, let me show you the face amount. You said it was 15,000. Don't tell them, point to it. $12,200. And I said, what has happened is that you thought you were going to get one for 15, yet there must have been something that popped up either on your RX or something that popped up on your medical history that the client, you as a client, is only going to get a graded plan. Now, if this was in 2 or 3 months or 6 or 8 months, you are going to take a soft step backwards and say, let me re-ask these questions to see if I can get them a better policy. Sometimes you can, sometimes you can't. It depends on the competitor's product that they wrote to the client. Because we've got competition that's got higher premiums than we do. So you're going to say, well, there must have been something that popped up. Let me ask you the health questions. Bring out one of your policies, applications rather. Go through them, boom, 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 boom. Now you know that, let's say it's been 8 months ago, the client may have answered yes to a heart attack or stroke or something. We have carriers that if the client had a heart attack, stroke, a TIA, stents, open heart surgery that's been a year to 2 years, we've got companies that will give you an immediate standard rate. A little bit more expensive than the immediate preferred. The immediate standard costs a little more, yet they have no waiting period. So now this is all going through your mind. How do I address it? What do I say? When do I say it? Say, you know something? This is a good company, because you don't want to embarrass them and say they picked out a bad company or they made a bad decision. I said what it looks like is that the agent was not forthcoming with you. He told you what you wanted to hear, yet the company approved you for the graded plan. With your permission, I'd like to ask you some health questions to see if I can get you something better to where you have immediate benefits, now the beneficiaries, for your son Anthony and your daughter Marie. Unbeknownst to me, or not unbeknownst to me, unbelievable, I sometimes hear them, don't worry about it, I'll keep it, I don't want to go through the process again. And I look back and I say, you were just lied to. The agent that took care of you did not do the right thing by you, and you want to keep it. It goes through my mind. Most of the time, when you tap your brakes, you go a little bit slower. You're giving the information to them in small doses to where they can accept it and understand it. From there, most of the time, they'll sit and say, what do you have to offer? Now from there, you do your application process. Hopefully you can provide them something. Now, let's say you can get them an immediate standard with your favorite company. And that premium comes back to be, let's say, $6 higher. $6 higher. I don't tell people your premiums are going to go from 100 to 106. I tell them, I say, what I can do for you, keep your premiums right around the same, get you 15,000. $6 to me is 20 cents a day more. Okay? If it's $9 higher a month, it's 30 cents a day more. So you want them to get the 15 they had, show a small amount that is going up, whatever that increase is, divided by 30 days. $9 a month, as I said, is 30 cents a day. Because that's easier to accept than $9 more. Think about it. Now, let's say you go to somebody's house and they say they got a policy for $15,000, $100 a month, and it is perfect. Okay, nothing's wrong with it. Everything's in check. I still do the same thing. Look at the application in the back. Look who their beneficiaries are. Come to the front of it. Look at the table of contents to make sure that $15,000 starts on the right-hand side and goes all the way down. With most companies, they'll have a paid up in addition. They'll have an extended term life column, and all whole life policies have a cash value. So the cash value, all whole life policy that I've run across have all had a cash value. The longer the client has that cash value, as long as they've had that policy, the cash value grows. And the reason there's a cash value in there is because when a person is at a certain age and they apply, they're going to overfund it in the beginning to where they've got level premiums all the way across. So they're going to have a cash value, then they got the cost of insurance, which is not shown to the client. And what happens is that when the client gets older, the cash value tends to grow a little bit slower, for the mere fact is they're pinching from the cash value to do the cost of insurance. So the client is there, and you say, okay, Ms. Jones, what you have is a policy for $15,000. You pay the $100 a month, and you have a cash value of $1,832. You've got a paid up amount of, let's say, $3,200, and you have a reduced paid up amount for 1 year and 30 days. So the longer the policy is in place, the cash value will grow, the extended term will grow, and the payoff will grow also if they want to get the policy to have it paid up. So now you got to sit and look at this here. If you got a client who is not able to make their payments, let's say they're having some financial problems, they can't make their payments, you can offer them the cash value, offer them the paid up addition, or the extended term. I don't know if I would do that. I'd probably see if I can lower their face amount with that company they already have, depending on how their health is, or move them to another policy with you, lower the premiums to where they have some coverage, and get them whatever cash values out of there. Some people are going to tell you, Joe, I didn't think I had 15,000, I thought I had just 10. That happens once in a while. Joe, 15,000 I think is going to be enough. Well, now you got to sit and think about that 15,000. A funeral today is 10 to 12. Easy. Some areas are a little bit less, and most areas are a little bit higher. Because since COVID, everything has increased in prices. So now you may tell the client, you know something? You're correct. Yes, Ms. Jones, you're only 62 years old. You're in good health. Funeral today is 10 to 12, maybe 13 depending. But I said, let's say you live another 20 years, 82. Say you live 25 years, you're 87. The longer we live, the more it's going to cost for Anthony and Marie to bury you. Now, based on your current income now, how much do you feel that we can add to a policy to where your kids are not left responsible with this sad bill? They're going to think about it, and they're going to tell you this here. That's enough. I don't want to spend no more money. I'm not going to worry about it. My kids have money. They'll pay the rest. Or they may sit and say, what can you offer me? So now you can either show them one for 7, 6, 5, and 4, or you can do the price point selling and ask them, how much do you feel comfortable adding to this important program on a monthly basis? They're going to look at you, and they may not know how to answer that question. They're saying, damn, I don't want to say 50 because now I don't have money to do this. So they may say, well, I don't know. I would say, well, can you afford $1 a day? Will $1 a day affect your income that much? That equals $30 a month. I mean, 30 a month. Times 12 is 360. That's a nice little add-on for you. They're going to go, well, yeah, that sounds all right. That sounds all right. Now, when I do my warm-up and when I'm talking to people before I even ask for their policy, I'm normally asking them about how their health is. And I've got probably about 75 to 85% thought process of where they can go with what company. Okay? Then I'll go on to show them another company, show them what I can offer them. Now, if they say they can afford $1 a day, I'm going to show the $1 a day on the bottom, pricing. I'm going to show maybe one for 34, one for 41, one for 47. I'm still going to show the higher ones, yet I'm going to have the bottom one at $30. Knowing you can always come down to 25, because you don't want to walk out of the house with no sale. You want to walk out with something. Part of the pie is better than no pie at all. But the benefits of showing somebody and going over their policy is that you're showing them that you care. You're walking them through the policy that the agent probably never went over with them. You let them see exactly who their beneficiaries are, the face amount, the premium amount, whatever benefits they have with that policy. Are there any changes you need to make to the policy? You want to add another child, you want to add your husband to it. So now you're trying to get a conversation going with them, not just tell them this is what you have, put it away, try to sell them something. You want to go slow. You want them to show, you want them to feel that you are a valuable person with them. You're there to offer them the information, explain to them how it works, and let them know how it goes. Now, the cons is not showing them, not asking for it. And what ends up happening, that I spoke to many agents, they said, Joe, I have no idea what I'm looking at. I said, well, think about this here. Either you have no idea today when you're looking at it, or you don't ask for it for another 6 months, and you're at the same situation 6 months from now as you are now. The policy's not going to bite you. It's not going to tell the client you have no idea what you're looking at. It's not going to tell the client this is the first, second, or third policy you've looked at. Grab it, hold on to it. And what you're going to see is that a lot of the policies that you're going to be running across look differently. They all have a cash value on a whole life. Not all companies have the paid up in additions or the extended term carrier, extended term rider. They don't all have that. So the more you get used to it, the more you're going to sit back and go, yeah, I've done this before. Yeah, Ms. Jones, you've got this and you've got that. Yes, you're taken care of. I think we ought to discuss a little bit more, because what you have for Anthony Marie is not quite enough. And what we're going to do, we're going to kind of figure out what fits in your budget. What do you feel that you can afford per month? Okay. Once you get comfortable with that policy, you now have that policy in your hand. You're going to use it as a tool to help them see that what they have may not be enough. Okay? Now, every client you're going to deal with is going to be a little bit different. You could get one folder with 2 policies in there. I went and wrote somebody years and years ago, before we got Transamerica, which back in the day it was called Monumental. So I'm going back 100 years ago, it seems like. She brings out a Foresters folder. And we had Foresters. So she says, Dad, we've got this policy. So I look at it, Foresters binder. I look at the inside, it says Monumental. I said, whoa, what's going on here? Well, the agent probably had an extra Foresters binder, put the Monumental policy in there. Open it up, looked at it, okay? Clients kind of want to make themselves feel good that they have something. You want to make them feel good that they've made a decision to buy something. So now you have to understand that they see there is a value and a need to that policy because they bought it. The other salesman did the job for you. Don't leave your kids burdened. Don't leave your husband burdened. You don't want to leave the world owing money. They've done all that for you. Your job is now to review it, look at it, go over it, discuss it, and say, by the way, we need to talk about a little bit more. And I think you can agree with me because you're only 62 years old. Cost for funeral costs this. You only have this amount. We need to talk about a little bit more. The nicest part about it, today we're in August. Let's say their birthday is in October. Now we got time of the essence. Let me lock you in today. I don't need any money today. Let me lock you in and I'll start it for you next month on September 3rd or the second Wednesday next month. And I'll get you locked in at 62, which your premiums will always be level. If we get one, let's say for $5,000, $7,000, whichever one you feel is affordable for you, it'll always be the $5,000 or the $7,000. There'll be an exact cash value in this program, like I showed you in the other one, that grows every month. Would you want to put your son Anthony and your daughter Marie on this new application as your beneficiaries? Now you're trying to get the hook before they tell you yes. Now hopefully you're one step closer to getting them to say yes. And also the nice part about it is that once you get this new policy, they can't cancel you. Once you get it, it's based on your health today. So the beauty about it today, we're going to get you at age 62. We're not going to wait till you're 63. Number two, your health is fantastic. If I come back in 6 months or a year from now and your health has changed, I cannot get you the same policy that I want to get you today. So now you're telling them all the reasons why they should buy something by just asking them, can I see your current policy? The more you look at the policies they have, the more comfortable you're going to be. You're going to learn more about different insurance companies, how they work. You're going to let them see yours works this way here. Now, I know off the top of my head, CVS has the cash value, the paid up in additions, and the extended term. My recommendation to you is the next policy you deliver from a carrier that has all of those three line items, I'd make a copy of that page there. Okay? Hopefully you got one for $20,000, $25,000, which makes those numbers look a whole lot bigger. They said, this is the policy, this is the program I want you to look at. My favorite company. This company here only's got a cash value. This one here has these three items here. So depending on what your finances are at a certain time, you call me as your agent and I will go over the current one you're going to get today, okay, and the one you have now. Take your time, ask for the policies, get to know them, review them, tell them who their beneficiary is, look at the back to see how the questions are answered, then go to the front to see exactly what they actually receive. Make it a great day, guys. We love you. We appreciate you. If you got any questions, please call the office. Continue working hard and be safe.